Hello, today we're going to be talking about Walmart for the final project. So the first question is, what are the company's total assets at the end of its most recent annual reporting period and why this is important? So in 2022, Walmart's assets were 244.86 billion, which is a 3.02% decrease from 2021. This is important because it allows Walmart to invest in different things, such as their e-commerce platform and their Walmart Plus subscription service, which is essentially the same as Amazon Prime. So they are very aggressive in their e-commerce strategy in this sector in particular. And what were the assets at the end of their previous annual reporting period? Last year, the assets were $252.496 billion. How much cash and cash equivalents did the company have on hand at the end of its most recent annual reporting period? The company had the amount of $14.8 billion in cash or equivalents at the end of its most recent annual period. Now to the accounts payable. The accounts payable were around $55,261,000,000. And for accounts payable, it was $49.141 billion. The company's revenue for the last three annual reporting periods are below. So in 2020, it was 523.946 billion. In 2021, it was 559.151 billion. And in 2022, it's been 572.754 billion, which is an increase of 2.43% from 2020. Now, what is the change in dollars in the company's net income from its most recent annual reporting period to the previous one? So it's $234 million from 2021 to 2022. Now, what are the company's total assets at the end of their most recent annual reporting period? It's 81,070 in millions, which is 81 billion 700 million, or 81 billion 70 million. Now, what are their total current assets at the end of the previous annual reporting period? The assets as of 2021 were 252.496 billion, which is a 6.77% increase from 2020. Now, why is this information important for a potential investor or employee? Now, we have to consider that they have a significant amount of cash on hand, which will allow them to invest in new things. Recently, they've been really investing a significant amount of their cash on the e-commerce sector. Also, generally, when investors are considering investing in a company, they should look for the net profit, sales, and revenue growth. Ultimately, the investors, at least not very strong investors, are not there for the dividend payouts. So they should really look at growth, which will indicate how much their stock price will increase. And that is generally where these investors will see the most gains. Now, the most important statement for these investors could be the income statement, because they can see the most transparent financial information about the company. Now let's go on to their liquidity ratios for Walmart. So the current ratio, which is current assets divided by current liabilities, is 0.93. The asset test is current assets minus inventory divided by current liabilities, which is 0.28 to 1. The receivables turnover, which is net credit sales divided by average account receivables, is 76.7. The inventory turnover, which is beginning inventory plus ending inventory divided by 2, is 8. And let's look at their profitability ratios. So the asset turnover ratio, which is net sales divided by average total assets, is 2.34. Their profit margin, which is net income divided by net sales, is 2.39. And the return on assets is net income divided by average total assets is 5.69%. And the return on common stockholders' equity is net income preferred dividends divided by average common stockholders' equity is 15.2%. Let's look at their solvency ratios. The debt to total assets ratio is liabilities divided by total assets, and that is 62%. The times interest earned is operating income divided by interest expense, which is 1.42. So in conclusion, even though Walmart has obviously been through the pandemic, which has affected a large portion of the general global economy, their aggressive e-commerce strategy has really proven to not save them from this scenario, but certainly help carry some of the losses that were incurred as due to the lockdown. Now, Walmart has seen, of course, that there is a very, very large growth opportunity within the e-commerce section, which is obviously shown by their very aggressive investment strategy in that sector and their introduction of Walmart Plus, which is the Amazon Prime competitor. So, yes, despite very turbulent macroeconomic conditions, Walmart has proven to shine as per usual, really, and it is setting itself up to be at the forefront of online and in-store retail sector. Now, while it is still behind Amazon on the online sector, of course, they have their retail sector, which is something that Amazon is completely lacking. So that is it. Thank you. And this is their catchphrase, which is save money, live better. Thank you.